Good afternoon, this is Joe Vaclavik from CME Group here in Chicago. The corn market traded both sides of unchanged here on Thursday in a pretty quiet trading session. We did have some negative news this week. We had a kind of disappointing ethanol production number, disappointing export sales, but still the market hovering less than 5 cents away from its recent highs in new crop contracts. Weather across the Corn Belt has improved a little bit here this week. A lot of the Corn Belt should be dry for the next 4 or 5 days, so I think planting pace will pick up quite a bit here. We should see a lot of the crop planted during the next couple of weeks. We're going to see some heavier rains return to the central and eastern part of the Corn Belt late next week, but for the moment here, the planting pace looks to be improved. We should see that reflected in Monday's crop progress report from USDA. Now, weather will be the big thing moving forward here. You know, obviously, what type of crop are we going to have in the U.S.? That's going to have a lot to do with price potential. There's also a lot of wild cards here that we haven't seen, say last year or even in years past. We've got this RFS issue. There's a big battle going on between big oil and the ethanol lobby. We've got the issue of NAFTA. We've also got these China tariffs on soybeans, which could also impact the corn market down the road to some extent. So we've got some wild cards here that could result in volatility over the short term. You've always got headline risk. You know, we come in with a negative headline like we had a few weeks ago with the China tariff on soybeans. There's potential for things like that. So risk a little bit elevated here. Again, Joe Vaclavik from CME Group here in Chicago.